Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 23rd of April 2019, so welcome everyone and welcome to this Tuesday's afternoon session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. There's always a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now the first one I want to touch on very quickly here is the FTSE100. Now I talked about this one last week, and basically I was telling you guys to keep a close eye on this downside resistance line initially. Then we got a nice break above it, but for better confirmation, what I was saying is we need to see a nice good pop above the 7,480 zone approximately here. We need to have a nice close above this. So today we're seeing a nice push. Certainly that's a good step here for the bulls. I mean, we can see a strong push above this barrier, above this 7,480 zone. Let's keep a close eye on it today, especially going into the close, and wait for that wait and see where the day is going to end, and if it's going to end above this 7,480 zone, yep, that's wonderful. We could see further acceleration to the upside. Still, I'll repeat myself, we are keeping a close eye on this 7,550 level, and just to show you what that level was in the past, that was the high that we saw here on the 27th of September 2018. So this is going to be our first potential good target here, good area of resistance. Of course, if that gets broken, then the path towards higher levels could be open. But let's go step by step. Let's first target this 7,550 level. Let's see how this is going to play out. For now, this is all looking nice and positive for FTSE100. In case this decides to reverse back down, now this is where it could become a little tricky, because even if it, let's say, drops below this area here, below the 7,450 level, we need to see the index dropping below this downside resistance line that has been running here from the highs of May 2018. So before we could consider lower areas, we need to see that drop here, guys. So we're not going to kind of aim for lower levels if we don't kind of get that break here below this downside resistance line again. So for now, of course, that seems to be the second option here for FTSE. The first one, of course, is the upsides, given that it's breaking now this key area of resistance near the 7,480 zone. But like I said before, let's wait and see where the day is going to close. If it's going to remain here above that level, then yep, a further acceleration to the upside is possible, and this is where we will target the 7,550. Jumping into the S&P 500 here now, looking at the cash index right now. I mean, the index closed yesterday. It was open yesterday and it closed around the 2,908 zone. Now looking at the cash index right now, it is slightly above that. It's around the 2912 level. So let's keep a close eye on that. But what's more important, let's keep a close eye on this little high that we saw here on the 17th of April, and that was approximately around the 2,918 zone. So in a way, long story short, guys, that's where we're going to be looking at here, the 2,918. We need to see a nice good pop above this in order to kind of see a forthcoming higher high, which could then potentially open the door towards the 2,941 level. And just to kind of show you what that level was here in the past, and basically that's the all-time high that we had, that we've saw the S&P reaching in October. So that's why, guys, for now, keep your eyes on the 2,918. Certainly, looking at the cash index right now, it is trying to push closer to that level. But again, let's not rush into this. Let's be cautious. But as I said, a nice good pop above the 2,918 level could open the path towards the all-time high level again. So keep your eyes on this one. In terms of the downside, well, from the very short-term perspective, and this is, by the way, daily chart that I'm looking at, so in a way you could start considering lower areas if we see a drop back below the 2,900 level, and then of course a drop below the 2,890 zone, 91, something like that, so approximately there, which is near the lows of Friday. So and that's why, guys, Thursday, near the lows of last week's Thursday. So that's why a drop below the 2,891 could potentially lead towards further declines, but this is the level for us to get slightly more comfortable with lower areas. Then that's around the 2,862 zone, approximately there, 62, 63, something like that. So keep your eyes on this one. A nice good drop below that could lead towards further decline. So given that we're very close to the all-time highs, it could be a great opportunity for the bulls to push the index toward that level. But then again, let's always keep an element of surprise in all this, and yep, let's just wait and see. Let's wait for a confirmation break of some of these levels that I've just mentioned, and then we'll just go with that and see where it wants to go further. Jumping into DXY very quickly, just to kind of wanted to show you that the dollar interest is picking up. So you can see that this is huge spike that we're having here right now in the DXY, and the dollar index is breaking above this key area of resistance that I was talking about in one of my videos last week, and I was telling you that to keep a close eye on this 97.52 zone marked by the high of the 2nd of April, and now it seems that it's aiming for the 97.70 because that's our next target here. Looking at this from the pivot point perspective, of course you can see that the index is already way above its, or I shouldn't say way above, but just above its R3, today's R3. So we may see this one continuing further up here, but again, the 97.70 level, that's what we're keeping a close eye on, and this is the level that I'm talking about. So basically this is the high of March 7th, and also it marks the high of the 14th of December last year, and also not far from the highs of the 12th of November. So that this is you can see how, you can see how important this level is, and that's why we're going to be targeting this 97.70 level first. We may see maybe a bit of an overshoot here, but the most important will be to see where the daily candle is going to close on that one. So for now, this is the story here. This is what's happening. There's like a lot of buying interest in the dollar, and you'll see that in a moment in one of these pairs, and the gold as well. So basically, for now, long story short, guys, on the DXY, yep, 97.70, that's where we're targeting. It's not far from there, but if, let's say, this suddenly retraces back down and drops back below the 97.52 level, now this could turn out to be maybe a bit ugly for the bulls in the short run. We may see the bears kind of taking this as a good opportunity to drive this index lower, maybe back down towards this 97.26 zone, or even further down. But again, for such a scenario, we would need to see DXY traveling back below the 97.52 level and closing below this area here. So for now, this is looking more positive than negative, but then again, it could be slightly overextended here already on the 4-hour chart, but yep, let's continue observing this price action. Jumping into gold now, this is what I was talking about this morning, and I was telling you guys to keep a close eye on this this level right here at around 1271. You can see that we've managed to break that one nicely here to the downside, and now kind of almost reached the 1266 zone, so just fell shy of a few points from reaching that area. And also we do have this long-term medium-term upside support line here running from the lows of August 2018. This is a very important line as well to watch, so let's see how this is going to play out. For now, of course, if it struggles to overcome that, this line, then we may see maybe the bulls jumping back in here and potentially pushing this one back up towards the these recently achieved levels here. But again, for now it is looking more bearish than bullish. But let's see how this is going to play out near the 1266 and near this upside support line. So all eyes are on this right now. Jumping into euro dollar very quickly. So you probably already understood what's happening here with euro dollar and GBPUSD when I was talking about DXY basically. So the euro dollar is selling off nicely here. Basically, need to kind of admit one thing, that initially when I was looking at this one last week as well, I was looking at this level at 1.1250, so we did have a nice push above that, but you can see that the pair kind of struggled to push away from it and kind of quickly kind of got back below it, and then started just kind of bouncing around this area, bouncing around this 1.1250. And right now, like I said, we are seeing this interest in the dollar, the US dollar, and you can see the effects that we're having here on the euro dollar. So basically, long story short, guys, we did have a drop below this. One thing that actually is working out nicely, what I've said, that a break below the 1.1228 zone could open the path towards these lower areas. Certainly we are not far from this key area of support near the 1.1205 area. Slightly below that, we do have today's S3, which is around exactly around the 1.12 level, so that could be met today. But again, like I said, for now, all eyes are going to be on this level here on the 1.1228, because if this decides to reverse back above it today, this is where, I mean, it could be tricky again, because this is going to be our little neutral territory. And in other words, to be honest, we would need to actually adjust one of these levels here right now, because that's what we're going to be looking at here, because this is what was reached yesterday. The pair managed to reach the area around the 1.1260, maybe just slightly above that, 62, and that's what we're going to be keeping a close eye on, because we would need to see a nice push above this 1.1262 level before we could consider higher areas. This way, of course, we would get more comfortable with higher areas, at least up until here, up until the this level right here near the 1.1280, or even this up until this downside resistance line could be tested again. So basically, for us, in order to kind of consider higher levels, we need to see a push back above this 1.1262 area. But you can see that the euro dollar continues to sell off. So now, as we speak, it is testing this 1.1205. Let's see if it actually manages to reach this 1.12 zone. Just kind of fell shy of a few pips of reaching that, so it's only about 2 pips, something like that, 2.5 pips. But like I said, let's see if it actually manages to reach this 1.12 zone, because if it continues to slide lower, the next target for us is around the 1.1190 area, so which acted as a good area of support here back on the 2nd of April. And yep, very good important level here, 1.1190. So in a way, could come in line with the typical trading activity that we get. Like we it tends to overshoot some of the important levels. Maybe it could test this 1.1190 and then quickly rebound back above the 1.12. Something like this could be possible. So continue observing this, continue monitoring the price action, and of course continue monitoring this 1.1228, because if this comes back and travels back above this level, then this is going to be our little neutral territory, and we're just going to stay put and just continue observing the price action. For now, this is looking more bearish than bullish, but again, there are some obstacles here underneath that the pair would need to overcome in order to kind of, let's say, move further down the line here, move lower towards, let's say, even the 1.1175 zone, which was the low of March, so the lowest point of March. So again, like I said, it needs to overcome some of these key levels. So the first one, of course, is the 1.1205, the 1.12 level itself, and the 1.1190, which marks the lows of the 2nd of April. So keep your eyes on this one. For now, like I said, this is looking more bearish than bullish. GBPUSD, very quickly on this one as well, continues to travel lower. This one is a bit of a this one draws a bit of a worse picture than the euro dollar, basically because it is now breaking this key area of support near the 1.2975 zone, and also it broke this 1.2960 level that I also mentioned in one of my previous videos. Basically, if it stays here below this 1.2960, this could be a bad sign for the bulls, as it would increase the chances for GBPUSD to travel further down towards the 1.29 level here, which is near the lows of the 18th of February. So keep your eyes on this one. Again, like I said, if it continues to trade below the 1.2960 level, and if it struggles to get back above it, then we could see further declines here towards the 1.29 zone. So keep your eyes on this one. In terms of the upside, well, we're going to take a more conservative approach on this one, and wait until we see a push back above these highs, today's highs near the 1.3020. Of course, then a better confirmation would be a break above the 1.3030. And then, of course, we'll target these slightly higher levels. But for now, it seems to be that the upside is slightly off the table. Let's see how this is going to continue, and if it's going to continue driving further down, where will it find support today. And very quickly on USDCHF, this one's exploding. Just look at this move. Of course, it's a combination of a strong dollar and a weak Swiss franc. So basically now we need to kind of go back in time here for quite a while, and to try to find a good potential area of resistance for this one. So in a way, it's now testing the areas near the ones that we had here in January 2017. So basically a very good potential target here could be this little high that we saw here on the 11th of January, and that was approximately near the 1.0248 zone. So keep your eyes on that one. So 1.0248, or even the way you want it rounded up towards the 50, 1.0250. That could be our next potential target here on USDCHF. If, of course, this rally continues, it's not far from it. It's only about 25 pips away from hitting that level. So in a way, it could be reached today, or if it doesn't want to reach it today, we could see maybe a bit of a slide, a bit of a correction back down, and then another leg of buying maybe tomorrow, where we could then test this 1.0250. So keep your eyes on this one. For us, let's say to start looking at the downside, we need to see a drop below the 1.0125 area approximately here, and only then we will consider further declines, at least towards this short-term tentative upside support line. So for now, that's the game plan here. It is looking quite positive. Don't get me wrong. It is also quite overextended here on the 4-hour chart. But then again, with this pair, we may see a bit of retracement and then another push higher. So keep your eyes on the 1.0250. Okay, guys, I hope you found it useful. Thank you very much for staying around, and yep, I kind of went a little bit over my time, but I do apologize for that. But yep, thank you very much for sticking around and watching till the end. If you want to join me tomorrow morning at my Trader's Espresso, and that's 6 o'clock GMT time. But for now, I hope you have a wonderful day, and I'll see you later. Bye bye.